Swing, you bum.
Your approach seems so simple. Why doesn't everybody do it?
Well, I think partly because it is so simple. That the academics, for example, focus on all kinds of variables. Partly because
by academics you mean professors of
right,
finance?
Yeah, the data's there.
In business school?
Sure, and the data's there. So they focus on whether if you buy stocks on Tuesday and sell them on Friday, you're better off, or if you buy them in election years and sell them in other years, you're better off, or if you buy small companies. There are all these variables because the data are there, and they've learned how to manipulate data. And as a friend of mine says, to a man with a hammer, everything looks like a nail. And once you have these skills, you just are dying to utilize them in some way, but they aren't important. If I were being asked to participate in a business opportunity, would it make any difference to me whether I bought it on a Tuesday or a Saturday or an election year or something? It's not what a businessman thinks about in buying businesses. So why think about it when buying stocks? Because stocks are just pieces of businesses. Being a sound investor really just requires a certain control of your temperament and the ability to know what you know and know what you don't know and occasionally act.
Greatest investor of our time, but you'll find him in Omaha, Nebraska. He has billions of dollars, but his lifestyle is Midwest simplicity, and all that money is going to charity. He's been wildly successful, but says there's nothing to it. We're off to meet the Wizard of Omaha, Warren Buffett, next on Adam Smith's Money World.
Adam Smith's Money World is set in motion by a grant from the MetLife family of companies, a financial leader for more than 100 years.
And is funded in part by Unisys, an information systems company delivering solutions to businesses and governments worldwide. Unisys, the power of two.
Hello, I'm Adam Smith. On this show, you will meet a remarkable man, probably the greatest investor of his generation. When you say greatest investor, they measure these things with numbers, and this man didn't inherit any money, but has made in the stock market more than $1 billion. That's billion with a B. I met him almost 2 decades ago, and I'll tell you, you can't help liking him. In the investment world, he's a legend, but he doesn't have an office on Wall Street. He doesn't sit with his eyes glued to a computer. And he says, if you invest right, they could close the stock exchange for 2 years and it wouldn't make any difference. He doesn't generally do interviews, but I called on him recently to get some of the wisdom and aphorisms of Warren Buffett on the record. It is characteristic of Warren that he runs his financial empire not from Wall Street or the trading pits in Chicago, but from Omaha, Nebraska, in America's heartland. Omaha is home to the Union Pacific Railroad and, of course, the Mutual of Omaha Insurance Company, but it is hardly a financial capital. In fact, Omaha is better known for its stock yards than its stock market. Buffett's headquarters are in this Omaha version of an office tower. He runs his empire with a staff of only 7 people. Warren, if I had given you $10,000 when I first met you, and I devoutly wish I had, I would have millions today.
If you joined the partnership when we started in 1956, and when we disbanded it in '69, reinvested the proceeds in Berkshire, which was somewhat of a continuation, I think you'd have a little over $15 million now.
From $10,000?
Right.
From $10,000 to $15 million?
Something like that, yeah.
That's a pretty good record.
It's okay, but that doesn't tell you anything about tomorrow.
Well, let's talk about tomorrow. Could anyone do the same thing you did starting today?
If they didn't try and do too much the first week, yeah.
Right. How did Warren Buffett turn $10,000 into $15 million? The old-fashioned way. He has no computer, no Quotron screen, only common sense and a set of strict principles. We'll look at the Buffett formula for investing, and we will hear his wisdom on everything from the stock market to the evils of inherited wealth in a moment. First, here is how the man known as the Wizard of Omaha got his start. Buffett's interest in the stock market came early. His father, Howard, was a stockbroker until he was elected to the United States Congress. Howard Buffett was a frugal Republican. When Congress voted itself a raise from $10,000 to $12,500, Howard Buffett refused to accept the additional money. Warren, meanwhile, bought his first stock at age 11 and made a $5 profit. He eventually attended the University of Nebraska, then was rejected by the Harvard Business School. So Buffett went to New York and the Columbia Business School, where he met Professor Benjamin Graham. Graham was not only the co-author of the classic Security Analysis, he also wrote The Intelligent Investor. Graham preached something called value investing. Find companies that are undervalued by the stock market, buy shares, and then hold on and wait. Warren put those theories into practice. At age 25, he formed his own investment partnership and began to buy stocks. An investor who put up $10,000 when Buffett began the partnership in 1956 had nearly $300,000 in 1969 when the partnership was dissolved. During that time, the Buffett partnership never had a down year.
You know what the academics say. They say the market is efficient and no one can beat it. But you have.
And a number of other people that followed Ben Graham's principles have.
Right.
In fact, everyone that I personally know that has really stuck with the Ben Graham principles over 20 years or more has done appreciably better than the market.
Well, what about all the learned business schools that say you can't beat the market?
Well, then they aren't so learned.
But you've seen some of these papers.
I've seen the papers, but I've seen some other people's tax returns.
One of the companies Buffett acquired during his partnership years was a small New England textile mill, Berkshire Hathaway. He later sold the mill but kept the name. Buffett began investing Berkshire funds in the stock market, and in some cases he bought companies outright and made them part of Berkshire Hathaway. Berkshire Hathaway is now a holding company with a net worth of more than $3 billion. Last month, Berkshire Hathaway held its annual meeting, presided over by Buffett and Vice Chairman Charles Munger. Buffett believes it's very important to have patient, rational shareholders, since it's one of his tenets that Wall Street's obsession with the short term and with frantic trading are counterproductive. So Berkshire has never split its stock, and Buffett never talks to analysts, but this is the happiest tribe of shareholders you'll meet anywhere in America.
Warren Buffett is certainly the greatest investor in the post-World War II period, and maybe the greatest investor in history.
I think he has tremendous integrity and a very, very clear way of looking at the world. The superlatives could go on and on and on, and I'm not related.
Now, with Cox Internet and Mobile, the price of your plan won't go up for 3 years, guaranteed. And you'll get Wi-Fi equipment included at no extra cost. It's more of what you want and none of what you don't. Learn more at cox.com/value.
With Asana, you can manage any kind of work. From project intake, to campaign management, to strategic planning, or anything else your team works on. Asana works for you. Try for free today at asana.com.
Berkshire Hathaway shareholders have every reason to be happy. One share of stock cost $12 in 1965. Today, a single share sells for more than $3,900. That's right, $3,900 a share in the over-the-counter market. Buffett has achieved all this by sticking to those fundamental principles and by keeping things simple.
Warren, you say you like to buy businesses. How do you know what a company is worth?
I look for a business where I think I know what, in a general way, is going to happen. If you buy a bond, you know exactly what's going to happen. If it's assuming it's a good bond, a U.S. government bond. If it says 9% coupons, you know what the 9% coupons are going to be for maybe 30 years if it's a 30-year bond. Now, when you buy a business, you're buying something with coupons on it, too, except the only problem is they don't print in the amount. And it's my job to print in the amount on the coupon. And some companies I feel capable of doing that with, and others I don't have the faintest idea.
You seem to stay away from high-tech companies.
You name 10 high-tech companies to me and ask me where they're going to be in 10 years or 10 months, and I don't have the faintest idea. So that would be exactly like buying cocoa.